Good morning, stock investors, stock traders. Happy Friday. We've made it to Friday and we're making it through October with a market that is wanting to go higher. It seasonally, October is a month when stocks could sell off. We saw one terrible day on a Friday and that's it. So overall, the S&P continues to go higher through the month of October. And today, stocks are looking to go higher on the announcement that inflation was reported to be slightly lower than expected. So that's helping stocks out with the expectation that interest rates will be reduced. It's pretty much set that we'll see a rate cut next week. And now I think the general community is expecting potentially a second rate cut in December. So interest rates are already falling, and that helps the price of stocks because the price of a stock, if you calculate intrinsic value, you use a discount rate. And as that discount rate goes to a smaller discount rate, you get a higher value for that asset. So that's what's going on. It's a Friday. How are you today, Daryl?
Doing very well, Victor. It's good to be here.
Any
Hello,
thoughts?
everyone.
Any thoughts on that inflation report that we saw and interest rates?
It was good that it come in better than expected, and I think the two remaining rate cuts for the rest of the year is probably pretty certain. I think there's one priced for January as well. I don't know what the probability is on that. I can look real quick.
And at some point you'll need to upload your screen to the
I'm sorry.
software.
I usually do that before we get started. I apologize.
It's Friday. Friday, we get a pass. We get a couple passes on Friday. No worries.
Okay. So October's pretty much baked in.
Yep.
December.
Do you think we'll get a second one in December?
Yeah, I think so. Let's see what that's two rate cuts. And then sometimes it's easier to look at them in an aggregated view.
Yeah.
So October, a cut, December, a cut, and January, a cut.
Jeez.
58% probability on that one.
Risk on. Incredible. Good morning, Peter. We can take a look at SFM. Excellent. Well, thanks for sharing that, Daryl.
Okay.
So let me get back to my screen. And so the futures market is up. I don't get gold. I'll be the first one to kind of disqualify myself. But any thoughts on gold? Why is it going down? It's been
I think it was just way overbought. It was really extended on its price. We looked at it the other day. We can look at it again real quick. So let's look at gold, GLD. Yeah, let me go to just a couple year chart. Well, maybe
Bitcoin is going up today, but gold is going down.
Yeah, so you can see back here in 2023, the central banks were already starting to pick up gold, but it was still pretty close to its 200-day moving average. And then in the beginning of 2024, we started seeing it really accelerate. Slowed down a little bit. Slowed down a little bit in November and December. of last year, got a little bit closer to the 200, but then look after that. I mean, it is just really extended from its 200-day moving average. It was 30% above its 200-day moving average. So if we just really kind of maybe zoom into just like 6 months, it basically has only come down to test the 20-day moving average. Yes, no, 2 days ago. And then it was riding right along its 20-day moving average for 2 or 3 months and then started accelerating again. So it was getting pretty extended. It really doesn't surprise me that it's pulling back.
Yeah. Yeah, I don't know that I will ever be a gold investor. I've had, some friends and guys that I respect buy gold, precious metals, and they understood it, and I don't. So no, no problem. I'll invest in things that make sense to me, and they can invest where they need to. Thanks for sharing that. So that's what gold is doing. The market keeps going higher. Okay, we got that. And I think long term, we're going to see higher stock prices. Just the lower interest rate is gonna, I think it's gonna remind me of 2021. Now, I hope that we don't end up with the conclusion of 2021 was a pretty good bear market in 2022. But you know what? The market is the market. It's just going to do what it's going to do. So I'm glad that I'm invested and I've got stocks rising in price so that my portfolio continues to rise in value. And this year has been a really, really good year for my portfolio, and it looks like it's going to keep going. Probably 2026 is going to be a good year for stock appreciation. It's just going to be risk on. All right, so we got that going. Just to note, a couple of stocks that had really good days yesterday. Palantir up 2.84%. The semiconductor equipment and material space had a terrific day. Lam Research had good earnings, and they're up 4.45%. Applied Materials were up. Looks really good. A couple of others here. I'm not familiar with APH, but they were up nicely. Some of the bigger caps. Tesla. We covered Tesla in our earnings watch party on Wednesday night, and they were down 3.5% in the after hours, but they came back in trading session yesterday. They were up 2.28%. Amazon up 1.44%. The aerospace industry did okay, and specialty industrial machinery, so the makers of turbines and stuff, had a good day. Energy, oil prices have been going up, helping Exxon, Chevron, and material companies are doing okay. So there were some winners yesterday, some real good winners. And today we have several companies announcing earnings. The biggest being Procter and Gamble. And these guys produce a lot of products that we have at home, from dishwashing soap to laundry detergent, just a long list of products that we consume regularly. And the market likes what they had to announce, at least when I looked a half hour ago. Sanofi, Southern Copper, HCA Healthcare, General Dynamics, another aerospace company. So a good number of companies announced, but the big announcements are coming next week. I think on Tuesday we have a couple of interesting companies, Visa, United Health, but on Wednesday, all right, get a good night's sleep on Tuesday night, because Wednesday is going to be a big day. Microsoft, Google Alphabet, Meta, they're all going to announce on the same day. That is a pretty substantial day. we should see a lot of good information coming out of these two as it relates to that data center. We'll see how they're spending on the data center. And that's going to move the data center stocks. Meta as well is going to talk about data center. They just, I think a couple of days ago, a news story came out that that Meta let go 600 people in their AI business, which doesn't go along with the idea that they had, just a year ago, that, hey, they wanted to go after that AI market. Maybe they're seeing something that is a signal to the market that, hey, this AI thing isn't going to materialize anytime soon. We're not seeing enough ROI. So we're going to let go of some people, cut our losses at this point. Don't know, but I'm sure they're going to be asked about it because they had the announcement that they laid 600 people off. They could have easily waited a couple weeks until after their earnings, but they did it ahead, and maybe they're willing to talk about it. We'll see. Other companies are going to announce, including Caterpillar and ServiceNow. And then on Thursday, Apple, Amazon, Eli Lilly, MasterCard. Whew, man, big stuff. Big stuff coming. Today, we have a couple stocks announcing. The biggest one being Procter Gamble. The stock is up 2.5%. This is a safe stock. This is a stock that's been around forever. It's very well run. Its products, you can probably look around your home and you've got them. If you are a Tide customer, you're a customer of Procter & Gamble as an example. This stock has not been all that great of a performer. 1 year and year to date, not very good. 5 year, not good. They do pay a dividend. And this is a solid company. Whatever the economy, we're going to keep consuming the products that these guys produce. It's just going to be a product we need. So it's, to me, in my mind, it's a low risk business. And I don't know that tariffs are going to hurt Procter & Gamble because they produce products that are locally sourced and manufactured. So I don't know that tariffs are going to be a giant problem for these guys. So they already have the earnings updated. Nice work, stockanalysis.com. They grew 3% in the quarter, which is good for a company their size. It is a big outfit in a very mature industry and mature market. The products they produce, they've been selling them for 50 years. It's just a very mature market. These guys are very well run. So even though they're in a consumer packaged goods business, the gross margin's 51%, and they've been doing quite well for a while and increasing their margins to 51%. Profit margins of 19.4%. Free cash flow yield is 17.5%. Those are really good numbers. Solid numbers from a business that is very dependable. 14 analysts cover them. One analyst believes it could go to $209 per share. The least optimistic analyst says they are fairly priced at $153 price target. Right now, they're trading at $152 a share. So collectively, they think it's discounted by 14%. It's going to be a stable, slow growth stock. Getting, bigger. They're already big, and they're going to get bigger. And their profits are going to expand nice and smooth. So this is a nice, dependable stock. I decided to start buying into these guys. So far, so good. It's just a little bit of, hedging. I've got my more growth stocks performing great. They're getting the job done. I'm just thinking ahead. You know what? When we have that eventual correction that we should have, maybe we might even have a bubble bursting in AI. Stocks like Procter & Gamble are going to stand up really tall. So I'd like to build a position over time. And it's not a bad place to build if I'm looking at Procter & Gamble. I'm not getting the biggest discount you've ever seen. I've already updated my numbers based on today's announcement. And in my opinion, I'm getting a 24% discount on their shares. If I compare it to the value of each share based on the forecast of free cash flows that I have for the company, I get a 26% discount if I look at the net present value of future free cash flows. And I'm getting an 18% discount if I look at the present value of future earnings per share value. So collectively, 24% discount. I'm going to continue to accumulate Procter & Gamble, not on days when the stock's going higher, but it's looking pretty solid, and I like what I'm seeing. What do you think of Procter & Gamble, Daryl?
So I like dividend paying stocks, and I'm looking at 5 years of data here, and I found a pretty good support line, which is pretty much exactly where it's trading right now. It found that price point as resistance back in 2022, found it as resistance again in August of 2022, traded down basically because discretionary stocks or growth stocks really came into vogue here. But they did make some progress with a little bit of volatility, but they found resistance again in 2023. They traded above it for a few months, and then it acted as support. And then they traded way above it and came down and basically tested it twice. I have that arrow in the wrong place. Let me fix that arrow real quick. Well, I guess it's actually twice that it tested it. So I like where it's sitting right now. It's at a price point that has found either support or resistance many times over the last 5 years, and it's sitting right there. If I go into just a 1 year, we can see they've been on a downtrend. But I think for a stock like this, that's not something terribly urgent to worry about. I'm going to make that red. And then, yeah, so I think anytime you can get it under this price and around this support line, I think you're going to be in good shape because you get that 2.8% yield and 6% 5-year average dividend growth rate.
You know, the one thing I would add on Procter & Gamble that is a concern is I have Kroger, the grocer, and over 5 years, that stock's doubled in price. So mission accomplished on the appreciation of that asset, and they've paid a dividend. Procter & Gamble didn't do that. And that is I would say, something that I'm going to keep an eye on. They have to start seeing I have to start seeing their stock price appreciate over time, or I'll be out. All right. Anything else on Procter & Gamble?
Nope.
All right. Thanks for covering that. The next company that announced is Southern Copper Corporation. These guys, as the name would tell you, they have copper mines and they get copper to market as a commodity. They operate in Peru, Mexico, Argentina, Ecuador, and Chile. Okay. And that is regionally located well where you could have the distribution of their commodity go into those supply chains that are in South America as well as Mexico, the US, and Canada. So they could do it by train, which would be very efficient, or by ship. This is a $104 billion market cap business, revenues of $11.89 billion. The PE is a little high at 28.65. Copper is, without probably needing to say it, is a necessity for our world now. You have data centers being built, EV cars consume a lot of power. You need to build infrastructure for power generation, power distribution, and so forth. That's going to require a lot of copper. So copper is a necessity. You can go industry by industry, and it's a necessity. These guys pay a 2.47% dividend. Analysts think it's a little expensive because the stock has been working. The 1 year is 14, but the year to date, for some reason, just to compare, looks really good. Over the 5 year, this is getting the job done. 163% appreciation. And I could see that they are priced, toward the all-time high, if not the all-time high. So that looks really good. Copper has certainly been in demand. Now they announced today, it looks like the stock's trading higher, but they haven't released their financials. I looked on their website, I just looked at it. So we're just going to have to operate with information that's a quarter old. The revenue growth has been good. Now they're tied to the commodity price of copper, and that in general has gone up over the last year. But recently I've seen copper prices come down. And these guys are good at growing, profitable, nice and profitable. When we look at their gross margins, almost 60%. That looks good. And look at these profit margins, 30%. Free cash flow yield of 29%. That's excellent. So I think that's why investors really like this stock. The overall story on the space is positive, and these guys are providing a commodity that's a necessity. Now, analysts are divided on this stock. Some think it's worth $155 a share, and an analyst thinks it's priced way too high. It's only worth $71. So consensus is this stock may be priced a little too high. You're supposed to have a down year next year, and I have seen commodity prices come down, which I'm not sure why, because we just have so much darn demand for copper. But I'm not a commodity expert. I'm just reporting the news on that. Still, with the flat revenue growth that we're expecting, it's still going to be a profitable year. It's going to be a flat year. But who knows? If commodities with lower interest rates, and if we get increased economic activity related to that low interest rate, maybe these numbers turn green. We'll see. Looking at a valuation for these guys, I have them discounted by 57%, primarily because their cash flows are so darn good. Now, on the earnings per share side, I agree with the analyst that it's priced too high if you just look at earnings per share. But free cash flow is really strong. It actually provides a really nice discount if I look at the net present value of free cash flows. So this is going to be an idea that I'm going to watch and maybe buy into, because I have been looking for a couple of things within materials as well as natural gas energy. Looking for a good copper company. I'm looking for a new good natural gas company. I think I found a natural gas company in EQT. Maybe Southern Copper might be another addition to my portfolio. So they announced today. We'll see when they announce their earnings, but I'm glad for these announcements because it kind of tells me about companies that I hadn't thought of yet. This one here I hadn't thought of until I started reviewing it today. What do you think of Southern Copper?
I'm looking at 5 years here with the support resistance line, and this should be a red arrow. I'll have to change the color of that because it was resistance here, and here. It broke out above it, fell back below it. Then as it broke out, this was support. We did have a big shift up in the price starting with probably in about March of 2024, shifted up to about an average of 98. And much like gold, you can see the price is pretty extended from the 200-day moving average, and it does get extended, but it always comes back to it at some point. You can see that numerous times here. The 200-day was actually declining. It just recently turned up. The 50-day is increasing as well as the 20. We did come down and test the 20 yesterday, and it bounced off of it. But it does look like we had a black candle, so it jumped up, but then closed at 128. The relative strength is positive and the PPO is positive, but we did have a bearish crossover in bullish territory. So you'll probably be able to get a better price on it here, I would think.
Okay. I'll be patient. Maybe wait for it to come down a bit. It looks like a really good business to own. I mean, obviously, hindsight's 2020. For the last 5 years, they really have gotten it done for investors.
Yep.
All right. So moving on, the couple comments. First, Pedro, thanks for joining. We could go over evolution. I think it'd be interesting to take a look at it. And keep in mind, like and I'll comment once we get there. And then Brushi, good to see you. LFMD, we could take a look at that. I noted it. And then Fallsgrave, good to see you. Yeah, Deckers was getting hit hard. I covered it on the live stream yesterday, and it'll be very easy for me to cover on this stream, so I put it on the list. They are getting hit hard. The interesting thing is their revenue is growing. I think the market had a more ambitious kind of expectation, and we can take a look at it together. Might be an opportunity. The market's just overreacting, but we'll look at it. All right, so the next stock that I wanted to talk about that announced was HCA Healthcare. HCA Healthcare, they own hospitals as well as properties where you have medical operations going, where you have doctors' offices, and that kind of thing. And what's encouraging is the market is buying this stock up in the pre-market, up 3%. The headline that I'm seeing, they're lifting their outlook. That looks good. So that's a good sign for healthcare. These guys are doing great for the year. Year to date, up 46%. The 1 year, not as good because they had kind of a sell-off toward the end of last year. But 5 year, look at that. This is within healthcare. So they're operating hospitals. And I don't think they're listed as so the medical care facilities, healthcare, they're not listed as a REIT. So
no, they're listed in healthcare providers.
Yeah. Their market cap is 103 billion. Their PE is 17, forward P of 15, very small dividend. And analysts think, hey, they've gotten a little expensive, just slightly expensive. They have their latest earnings that were released today included in stock analysis. Top line revenue accelerated to 9.57, and they have a big number. So that looks really good. They are providing medical services. They're making money. That looks terrific. They are not the most profitable company you're going to find. It just goes with the territory. You're probably employing doctors, nurses, well-paid people, and they deserve it. So it keeps your gross margins down a bit. Operating margins of 15.6 and profit margin of 8.5%. Free cash flow yield of almost 11. So those numbers look really good for this type of business. The forecast on this business, analysts think it is getting a little expensive, and some analysts believe that it could go higher. Some believe it's priced quite a bit too high. And their forecast, they're going to keep growing single digit, and their profits are going to grow faster. These numbers look really solid, very solid business in a very good situation. I don't know how the decisions being made in Washington are going to affect HCA Healthcare, but it looks like these guys have just been getting it done for investors. Really solid performance. The market has opened. This stock is trading higher by a couple percentage points. Any thoughts on HCA Healthcare?
I'm looking at a trend channel that I may need to adjust a little bit. I think I have this line set a little bit too high. I'm going to bring it down to about right there. I try to get these trend lines touching as many points as I can. So where I had it originally, it was only touching 2. If I bring it down to about, somewhere in there, I can get it touching at least 3 points. So that's where I'll save it. So they are at the upper end of this trend channel that is started, I would say, in June or July of 2022. They did move above that trend line, but you can see once they do, they pull back in. So they are at the upper end of the trend line. So let's look at maybe just 1 year. They do have positive RSI sitting at 67, so just short of being overbought. They did have a bullish crossover in bullish territory on the PPO, and the accumulation is at a 52-week high at the moment. Money flow is positive. In the year, they have underperformed the S&P. They are outperforming the healthcare sector, and they are outperforming the healthcare providers industry group, while that industry group is underperforming the S&P 500. They are trading above an upward sloping 20, 50, and 200-day moving average. They tested the 200-day as recently as July. So looks like a pretty solid trend, but it is getting close to the upper end of the price range at the moment, unless there's a real breakout.
Yeah, I really like the channel that you've set up. Looks like this stock's just been dependable, predictable, and it stayed in that channel. And investors have really liked this stock. Congratulations to anybody that's an owner of HCA long term. Looking at their valuation, I think that HCA, based on the financials they reported today and even before, have a decent discount. I don't agree with the analyst on this one because their cash flows are looking really good. If you look at a net present value, it's discounted. And I actually think their earnings per share also provides a discount because their earnings per share is solid for next year. I'm giving them a PE of 18. They're growing. They're very consistent. And that profit was going to grow faster than top line growth. So 8% growth on that. So it is a decent discount on a well-performing stock. Not a stock that I own. And if they were to have a good dip, maybe dip down to a 30% discount, I might think about buying. But for now, I'm just going to watch it. So HCA Healthcare having a good day. It's up 2%, doing well for the market. All right, let's take a peek at the market, see if there's any stocks that are worth noting. Broadcom up 2.29%, Nvidia up 1.5%, Google up 1.5%. Looks like Amazon's having a good week. if they keep this gain, it'll be 4 out of 5 days where they've been clearly in the positive. So that looks good. Got a lot of green here in financials. Palantir is higher. Procter Gamble is higher. So that's where we're at with the heat map. Let's take a look at the overall index. The Dow is up, S&P is up, NASDAQ's up 1%. So it's going to be a nice green day. All right. Okay, so I think we got through. There's one more of the stocks that were announced, and we won't go too deep on this one. Sanofi. And Sanofi is a healthcare company. They do generic drugs. So they're developing marketing therapeutic solutions for immunology, inflammation, rare diseases, neurology, oncology. Okay. And for the 1 year, doesn't look great. Just hasn't been a big performer. But they announced today $122 billion market cap. The drug companies have not had a lot of appreciation over the last year. It's been rough for Merck, Pfizer. They make money, they just can't grow. And looking at these guys, have they been growing? Well, slow growth, and then more recently, the trailing 12 months negativity or negative growth rate. So that doesn't look good. Again, these guys do make cash flow and profits, but they've kind of hit a growth wall. And we'll see if that changes in the future. But Sanofi is trading up. Looks like the market did like what they announced. Looks good. Any thoughts on Sanofi before we get to requests from viewers?
Okay, so I have been in a downtrend most of this year, but if they can hang on to this daily gain, it is producing a shooting star at the moment. So it shot up, overshot, and then it's trading at the bottom of the trading range for the 7 minutes we've been in trading. So let me save this chart just so we have it. For future reference. Over the 5 years, I was looking at that first, and this just looks like a really volatile stock that's up a bit over the 5 years, 22% or so, but there are times when you would have been down 18%. So it's pretty volatile stock, but right now it is breaking above a downward trend. The 20-day is moving upward. The 50-day is moving upward. It's trading right. Yesterday it was trading right at its 200-day moving average, which coincides with this downtrend line. But we'll have to see what it does. If it holds these prices for the next few days, then it might be worth pursuing. Let me check and see what okay, that's pretty much a high. So I don't know how much upside you have. Looks like, you could run up 10% or so. And if it doesn't break above that previous high back in March, then you'd have to consider how much downside you might have. If it's at this trend line, then maybe you're only at 2% downside and 10% upside. That's a 5-to-1. Might be worth pursuing if it can hold this for the next day or two.
Interesting. Yeah, look at that trend. Doesn't look good.
No, the accumulation is also falling off. and money flow is actually negative at the moment. So it might find that challenging.
Thank you, Daryl. All right, so we've got a nice long list of stocks that we're going to start talking about that are being requested. Just picking up where I left off. Looks like Best Days. Thanks for joining. You want to look at MOH and HQY. I put those on the list. Just bear with us. You've got 5 stocks ahead of this one, and then Brushy. We can do a flyby on NBIS, Hood and Dave. And Mike, yeah, we can look at app. Just keep in mind we've got like 8 stocks ahead of this one. So, but we'll check out app, give it some time to rise. We'll see where it goes. So Sprouts is the first one from the request. And this stock for a while was growing. They're opening new stores. And this is in the grocery business. These guys do have a business model that I think resembles kind of Trader Joe's. If you guys have Trader Joe's where you guys live, I like Trader Joe's. We go there at least once a week because I think it's small, convenient. They have good food. So Sprouts is similar to that, and I would say they have a better like deli or prepared food section. I think it's pretty neat. But the stock, it rose nicely when it was growing, and more recently, it has been coming down. The market's been selling it off. It doesn't like the growth anymore. So let's take a look at their fundamentals. This is a $10.5 billion market cap company with revenues of $8.4 billion. They have a PE ratio of 22, and some of their competitors like Kroger have a lower PE. These guys, they have a higher PE because of their growth. Analysts are still thinking very highly of this company. They've been growing, but I think the same store sales is a very important metric to track because you could grow by opening stores, but it's very capital intensive. 17% growth. Now, why is the market selling this one off? The growth is looking good. So taking a look at gross profit is expanding. Free cash flows are growing. That looks good. Okay, this is the grocery business, so they're not going to make big margins. Okay. And I've been careful with Sprouts because they started in an industry that is really competitive. I mean, you're competing against Amazon. Amazon has Whole Foods, and then they have Amazon Fresh, which has kind of a model similar to Sprouts, where it's a smaller store, it's convenient, good food, that kind of thing, healthy food. And then you've got a big grocery companies like Kroger, but then you have Target selling food now, Walmart, you have Costco's. So there's just a lot of competition. You have, like I mentioned, Trader Joe's. You have Stater Brothers, all kinds of competition. So for them to break in and grab market share, it is impressive that they've been able to do it, but it's just a very competitive area. Analysts, 14 of them, and they're all believing this stock's more valuable than its current stock price. 47.68% discount. And looking at their revenue growth, the revenue is going to continue to grow. And profits are going to expand. So that looks good. Let's see if stock analysis gives us any more information. No, I don't have the same store sales, but I'll try to dig that up. Okay, so I think I have a valuation on these guys. Let me update that. Any comments on Sprouts?
So they are in a downcline. They're trading right at their 20-day moving average. That is declining. So is the 50-day and the 200-day. Their RSI had been extremely oversold. Has moved back up to around 48 and currently back at 41. So it lost a little bit of momentum when it reached this price right here at 112. The PPO is in bearish territory, did have a bullish crossover on the 10th of October. The accumulation, it's actually in distribution mode. The money flow has been negative since the 1st of August. I've owned this one before several years ago when there was the potential of them being bought out by Amazon, and Amazon ended up going up with Whole Foods instead. So I stepped out of it then and haven't really looked at it a whole lot since then. I do see a 50-day crossing below the 200-day. And if you really believe in the fundamentals of the company, then when that does that and the 50 days starts rolling back over, that's usually a pretty good time to step in. We could look at some other charts. That's when this is called a death cross. And when that happens, if the company is big enough to show up on the financial media, they'll start making all kinds of noise about a death cross. Sounds like a really scary term.
Yeah.
But when it starts turning back around, that's usually if the fundamentals support it, that's usually a really good time to get in because you're getting it at pretty low prices.
Wow, that's the first death cross we've covered today. We should have saved that one for Halloween, but maybe we'll get a couple of death crosses in 1 week. Sprouts is discounted based on like the research I've done on their free cash flows. It's discounted by 23%. It's also discounted by 12% on their earnings per share, but it's not a big discount. And I still worry about competition. It's like, geez, man, Sprouts is taking on some of the toughest competitors you can name, right? So it's just a watch stock. I already own Kroger. I'm happy with Kroger. I'm not going anywhere on that stock. And I did look up what their same store sales were, and it was 10.2%. That is very good. In the grocery business, that's very good. So same store sales look good. If an investor really likes Sprouts, maybe it's a good time to buy it. But the market's just not liking the stock. Maybe it is also concerned about competition. How's this company going to navigate competing against some of the world's biggest companies, right? Walmart and Amazon are pretty big. Kroger's pretty big. They really know what they're doing too. So we'll see how it goes for them. So that is Sprouts. Thanks for asking. Good to see you on the stream. So somebody wanted to talk about evolution, and that's I had some comments there that I think so it's Evolution Gaming. Which one is it? I think it's I think this is it, right? Yeah. And I think the gambling business is really under pressure. Vegas isn't doing all that great. Casinos are not performing as well as they were, when we were coming out of the pandemic in 2023, especially. So you're not seeing as much gaming on the tables. Now, one thing that I do see showing up is the whole prediction markets is beginning to really dig into the online gambling side. So these guys are licensing a lot of the on-premise casino games. And that's where I think the casinos are beginning to lose customers to the online gambling. options, which include online gambling as well as these new prediction markets. So this stock here is down 21.7, down over the 1 year. Just doesn't look good. It looks like the market is not liking this business. This is on the Swedish currency, SEK. And what is that? SEK to USD. So it's 0.11. So 0.11, we're looking at probably about 1.5 billion in US dollar revenue. PE is low. Forward PE is low. Dividend is very high, 4.5. And this business has been growing. So the growth is good. And the profits are very good. So it's all profit because I think they just license the games that they created. So it is a very profitable business, but the market's not buying it. See, 100% profit because they're just licensing these games with 50% net profit. Margins or the free cash flow yield is very high. So why isn't the market buying it, right? Those are awesome fundamental, numbers. And the answer, I don't know. This isn't a space that I have a lot of experience with. I'm not a gambler. I have more experience with software that's used by businesses, and that's where I would call myself somewhat of a specialist. But in this space here, nope. I don't have any experience really dealing with gaming companies of this type. But the market is telling us that, hey, it's not buying this stock, even though its fundamentals look terrific. It's just not buying it. Do you have any charts on EVO or
I don't
okay.
on this
We'll
one.
just move on. Yeah, I think the big picture story that I think is another threat to evolution is the momentum that Polymarket, Kalshi, the prediction markets are getting a lot of momentum to the point where DraftKings, I know this week they announced that they were interested in acquiring a prediction markets company. It's a smaller one, but they want to get into that space because they're seeing that, online people really like the whole prediction markets experience, I guess. And prediction markets are using a different area of, I guess, the legal methods of taking bets. And they're actually like Kalshi licensed themselves as a company that's comparable to, let's say, a Charles Schwab that is selling contracts to buyers and sellers of put and call options. You want to buy a put or call option on a stock, you can go there, you can buy it. There's one investor, or I guess a trader. There's a trader on each side, a trader on a call option that's buying, a trader on the call option that's selling, and somebody's going to make money. Well, that's a contract. And Kalshi used that as their business definition and got licensed to sell those types of contracts. The innovation was, hey, instead of just stocks, or they don't really do stocks, how about an outcome? What do you think like the rate cut's going to be in January? Well, you can go bet on that. What do you think, Taylor Swift is going to do this in 2026? You can go bet on that outcome. You can also bet on sports, which is big. And that's really gaining a lot of interest. So evolution is on the outside looking in on that opportunity. These guys are all classical games, old school gambling, and maybe the market's just not interested in buying old school right now. All right, so that's Evolution Gaming. Let's move over to LFMD. LFMD, LifeMed. So we've looked at this stock in the past. What's it been doing? All right. So it sold off pretty harshly and it hasn't been doing all that great. So LifeMed operates as a direct-to-patient telehealth company that connects consumers to healthcare professionals for medical care in the United States. So they are doing telehealth, very small cap, revenues 245, not profitable yet. According to analysts, a very discounted stock. They are growing. Why is the market selling them off so harshly? So we've got revenue at 245. They're losing some money because they're small. They're issuing out a lot of new stock. They're issuing out a lot of stock. They're liquidating the company to some extent because they're issuing out a lot of stock. Free cash flow is positive. That looks good. And margins look good. This business may have been undercapitalized, and that's why they're issuing so much stock. 6 analysts cover this stock. They all think it's priced at a discount. They're going to keep growing, and they're going to hit profitability in 2026. So these guys have enough there to be interesting. Let me look at their debt just to make sure we don't have a problem on our hands. Nope. We have more cash than debt, so that looks good. I mean, these guys, if they keep growing, there's going to be no way around it. They're just going to be more valuable. And the acquisition price isn't too bad. It's pretty low. But when is the market going to start buying this stock? I don't know. That's a complete guess. Could they be acquired? Potentially. I mean, they're setting up a business. They're growing. They're showing success. So it looks like a good growing business. Let me see if I have do you have any charts on LFMD?
I do.
Let's go over to you and then I'll work on the valuation if I have it.
This is one that we looked at in a prior show, and I can tell that, well, I had the chart saved, but I can tell where we drew the trend line at that time. So what I'm going to do is I'm just going to extend this out a bit just so we can keep an eye on that if we continue to get requests on this particular one. So they were in a downtrend from 2024 through 2025. They finally broke out above that negative trend and went on quite a run for 2 or 3 months. One interesting point about the RSI from a learning experience. Notice how the RSI peaked out on June the 2nd with this high. And there was one more push to a new high. But look how the RSI did not reach the same level as it did here. That means this last push was definitely running out of steam, and it created a negative divergence leading to this price decline that you see. So keep an eye on these RSIs because they tell you a lot about what the price is doing and the momentum and the sentiment behind the traders. It also went into a bearish crossover on the PPO before that large decline. So that was another sign. So we do have, they're in another decline right now. So I'm going to switch now to just look at 1 year so we can look at the recent action. Pretty much been trading sideways since April.
Mm-hmm.
And the 200-day is sitting right at the trend line. That's going to act as a lot of resistance. So I think in the short term, you've got about 22% potential upside. I think it's you'd like to see it close this gap from here. I guess this was earnings related somehow. But I don't know if it's going to be able to close that gap without some really big news, because it's going to have face double resistance here. The 21-day EMA is declining. The 5-day is declining. The 50 days declining. PPO is in bearish territory. RSI is in bearish territory, and PPO is in bearish territory. Continues to get distributed. Money flow is trying to get positive today, but it already looks like it's starting to run out of steam. So I don't know about this one.
Yeah, this one's like a little bit of a basket case, but there's a lot of money being made by this business in proportion to its revenue. Very good free cash flows. It's profitable. It's discounted. So if you watch this one and you do pick it up at the right time, you might make a fair amount of money. But right now the market just doesn't like it. So you'll have to act patiently and buy at the right time. When to buy a stock is super important. This one most definitely looks discounted. We'll see how it behaves going forward. All right, perfect. So we got a lot of comments coming in. Thanks everybody for tuning in. And it's a Friday, but you guys really want to check out some stocks, and I'll get to some new additions to the list in a second. I just wanted to take a peek at the heat map. The market is trading higher, and AMD is on fire, up 7%. Intel up 3.5%. Broadcom, Nvidia. So those lower interest rates, I guess, and it makes sense. More investment, and I think the data center build out is requiring capital, or debt. Some big, companies, smaller companies, in order for them to build out the data centers, they're going to have to issue out debt. Well, if you have low interest rates, the cost of that debt isn't going to be as high. So that's going to help them out. Google, man, this is a good looking stock. This is a stock that 5 months ago, this was my best choice out of the Mag 7. And I just felt like the market just has it wrong on Google, and it's been performing great. Amazon up higher. This is my current best bet out of the Mag 7. I think Amazon's misunderstood, and I've been buying up shares quickly in 2025. It's had a very good week. 4 out of 5 real positive days, and they're going to be announcing next week. Our friends at Tesla had a good day yesterday, not having a good day today, while a lot of other companies are having a good day. So overall, market's going higher. Risk is on. We are going to go higher. We'll see how high we go, and we'll see over the next 5 years. I'm expecting we're going to have a year kind of like 2022 where we got to take plenty of medicine and see stocks sell off because they're going to get too expensive. Valuations are going to get way out of whack, and we'll eventually have to deal with that. But for now, I'm expecting 2026 is going to be an up year. Just those low interest rates are too much of an upward force to ignore. All right, so let me hit the request list, and then we'll get back to looking at stocks. The next one up is Deckers. I'm going to park Deckers here. It's on deck. It's getting destroyed. But before I look at it, Shadow Guy, good morning. can't seem to find any gold miners. I've never looked at gold miners. They probably don't exist on the sheet. Let me see if I look at the sheet, because the sheet's probably a month old right now. So let me do a quick search on OEM. AEM, it's not in there. And then ORLA, not in there. No, I don't have any gold miners in there. Sorry about that. Paul, so you want to look at PKG. PKG. Yeah, put it on the list. You got like six stocks ahead. And then Mike, I noted that you want to look at Monday. So let's continue on. Okay, so Deckers is a footwear company, consumer discretionary footwear. Their latest success has been with the Hoka shoe. Really comfortable shoes. They also have UGG, which is a brand that's done well. So those are their primary brands. They are growing. And I looked at their financials yesterday. Now, this stock is kind of a little bit like Sprouts Farmers Market, where you saw a nice rise. These guys were really growing. They were outgrowing Nike. They also have very good margins compared to Nike. And then they started to kind of hit a growth wall, because their shoes tend to be expensive, by the way. Like the Hoka shoe is not something that you're probably going to, buy at a discount store. They're priced pretty expensive. Then boom, this thing just sold off. Market doesn't like Deckers anymore. It's down 41.9% over the 1 year, 56% year to date. And the fall, I don't know that it matches fundamentals. This is a $13 billion market cap company with revenues of $5.2 billion. PEs, 13.8. Analysts think, man, it's priced at a discount. They are growing. This growth, compared to Nike, this growth looks great. 9% growth. I'm sure the market didn't like a couple of their ratios and metrics, but I think the growth looks good in general. And they do have good profitability. Their gross margins are 57.6, good gross margins, good profit margins. Just the market, fell out of love with Deckers. It really liked the stock. Now it doesn't like the stock. And it's really punishing the stock price. Analysts, 19 of them are covering the stock. They all think it's discounted, and it's really producing a consensus big discount. They're going to continue to grow. That looks good. These guys are quite a bit smaller than Nike, so it's not this big giant company with a lot of bureaucracy. It's it's a good sized company, but it's nowhere near as big as Nike. And these guys are going to grow their profits. So I'm kind of liking their fundamentals. I'm not the first person to invest in apparel or footwear companies. Careful not to get too far into them, but man, these guys are offering a really nice discount. So I think it's an opportunity, because Deckers, I would say that their customer is probably a higher earning consumer. It's probably like the higher income consumer that's buying these products. And that consumer is doing well, by the way. The higher end consumer continues to buy. So this is becoming a interesting idea, maybe investable for me. Let's take a look at the chart, see what Daryl has to say on Deckers.
How are they handling the tariff situation? This looks like a tariff story to me. They hit their low in April when the tariffs
That's
were
it.
announced, and look how they just went sideways.
I
I
think you
don't
just
know.
nailed the main
Yeah.
reason why the stock's being hammered is tariffs.
Okay. Yeah, that's really kind of looks like what it is. So I have a support resistance line here. It did find resistance at this point back in 2023. It is found it as support in April, July, and October of this year. So let's go to a 1 year view. They are in a primary downtrend, so they have a 200-day that's down sloping. I've got this dotted downtrend line touching at least a couple of points. Did come down and test that resistance line, which seems to be pretty good support and probably a good buy price if you're interested in this particular one. It does look like they're falling pretty sharply today. I didn't see that little blip here, so that's a little worrisome that it broke so far below that resistance line, 6-7% below it. That'll have to be something to keep an eye on. Now the 5-day is turning down because of this trade today. It looks like that's probably where it's going to trade for most of the day because it's really overshot it, it's undershot it, and it's finding support right in the middle of that candle. So unless any other news comes out today, that's probably about where it's going to close today. They have a PPO that is getting into overbought territory as of today. It was, did I say overbought, oversold?
Mm-hmm.
It was oversold also on September the 30th. It'll be interesting to see if the RSI goes lower than it did here. If it can stay above that, that would actually be somewhat of a positive sign. So we had, looked like 3 days ago, we had a bullish crossover. Looked like it was making some progress to the upside, and today we have a bearish crossover in bearish territory. The accumulation is nowhere near its all-time highs back in January. We're at a 52-week low here, and the money flow is negative. I'd be careful with this one.
Yeah, this one's tricky. This one and Sprouts, I would say that I'm seeing positives on Deckers. And although there's a tariff involved, these guys sell a very high priced product that, frankly, consumers like. They're buying it. So they have more room to pay for that tariff. So maybe it shrinks their margins a bit, but they do have good margins. So, at some point, I think that stock's going to turn. All right. So next one up is Molina Healthcare. And this company is a health insurance payer involving themselves in low income Medicaid, Medicare programs, health insurance. And these guys, their stock will go where the government is funding. And the funding in those areas has really dropped. So their price, the stock has dropped. The 5-year, these guys were really doing well for a while. And then it just stopped working. I think right around in 2024, we began to see this stock really begin to sell off. Maybe investors were seeing that, hey, maybe there's going to be a change at the White House, and then there'd be a change on the amount of support that these programs are going to get, and that's definitely been the case. So these guys are not where I'm investing for health insurance payers. I think they're just too susceptible to policy change that's going to hurt them. Market cap is 8.47 billion. P ratio is really nice and low. They're discounted according to analysts. And even after saying everything that I said, they're still growing. So there's probably just a big need out there. Maybe they have to charge their customers, what ends up being the customer, a little more money, but they are growing. They continue to grow. Are they maintaining their profitability? Let's take a look at that. Free cash flow did go negative, and free cash flow did come down in 2024. So there was a rational reason why the stock was coming down. They still have a margin. They still have a profit. That looks good. And this one for me is not where I would take my capital, because again, for the next 3 years or so, we're going to have a president that's going to tighten budgets around this type of healthcare. So it's just not going to be an easy market for them to navigate. As mentioned, analysts do think this one is discounted, but I think they're using too much of the rear view mirror on this one. I just don't think they're going to do all that great going forward. And that would be my position on Molina. I could calculate discounts on this, but an important part of, I guess, my investing process is initially look at the business and understand holistically, qualitatively, what do I think about the business? Are they going to operate well? Is their industry doing well, or is it being, threatened by other factors? Is this business being threatened by other factors? And when I do that kind of high level qualitative assessment on Molina, it's like, I don't want to be in this business. It has too many threats to it. Too many things can go against them. So that's initially my position on them. And from there, it's, the fundamentals look good. It's a discounted company, but I'm kind of game over on my initial qualitative review of them. Additionally, if you are interested in a healthcare insurance payer, you've got United Health, you got Oscar Health, you got Elevance, you got a long list of health insurance payers that are they're not affected to the extent by the federal government reducing low-income funding for healthcare. So my capital is going to United Healthcare. It's not going to go to Molina Health. So that is Molina Health. Looking at the next stock, it's going to be HQY, and I'm not familiar with HQY. Equity, Health Equity. Have you ever heard of this company?
No.
Health Equity provides technology-enabled services platforms to consumers and employers in the United States. It provides health savings accounts, investment platform, online-only automated investment advisory services through Advisor, a web-based tool. The company offers flex spending accounts for health and dependent care. Okay. So that's the category. People can have a health savings account. This stock is flat year to date. It's up 10% for the 1 year. Decent return for the 5 year. Looks pretty good. It's a smaller cap at 8.3 billion. Revenue of 1.27 billion. Net income of 145 million. So they're making money. That's good. And analysts think it's a little discounted. They're growing. They're already a $1.2 billion revenue company, and they're growing at 15%, which is very respectable, 15.45. Their gross profit, they're 66% gross profit. Free cash flow is there. It looks good. This is a niche solution, and I understand where it plays. It's kind of playing in, people can have a health savings account and kind of manage it similar to a 401k and then pay for health related expenses. I don't have a lot of knowledge on it because I don't have one myself, but it seems like a decent niche. Analysts, 15 of them cover it, and they think, hey, this stock's got something. They all believe it should be priced higher. And when you look at their forecast, the growth is going to continue, although as they get bigger, that percentage growth rate kind of shrinks a bit. This isn't a bad idea, and the profits are really going to grow. We're in this year, fiscal year 2026 is ending January 31st of 2026, which is 6 months from now. So the growth in the profit looks good. The fundamentals look good on this stock. It's just a niche solution, right? It's not going to be a giant solution. It could be a good takeover target. Another bigger company buys them because they're like, hey, this is a good idea. We could add it to, United Health could buy these guys and they have one more business to offer their big employers that are customers. So not a bad idea at all. What do you think of health equity? Any information on the charts that you have?
Yeah, it's been in a downtrend since June. Looks like it had a double top at about 113 or so. Looks like intraday it shot up to 116, so around 113 to 115 or so. And then it went into a downtrend, but notice that it's broken above the downtrend line. I like those. Let's zoom in just a little bit more so we can see a little more detail here. Looks like the 20-day is leveled out. The 50-day had been declining for quite some time, but it is starting to increase now. And the 200-day looks like it's still declining. But if these prices can move above that 200-day line, then that'll start pulling that average up. The 5-day is in a pretty solid uptrend at the moment. The PPO is in bullish territory, the RSI. The PPO is in bullish territory. Accumulation is somewhat slow. Money flow is in negative territory. But I like the setup on this one. Looks like you may have a run back up at about 17%, and I think your downside would be about 8. So you got about a 2-to-1 ratio. This resistance line where I have my cursor set, if you look left, that's been tested 1, 2, 3 times over the last year. So I think you have pretty good support here. And once you get past this 200, I don't see much stopping it from getting back to its previous all-time high. Let me see what the I thought I had a there we go. HQY. Let me just see what the seasonality looks like on them. So I don't know how much they were up in October. November tends to be a pretty good year for them. So 64% of the time they're up by 7.6%. December looks horrible. So I would be really careful about this. 18% of the time, does it end up higher at the end of the month than it started the month? This is over 12 years. We could say we haven't had December yet. So let me pull it back to 11 years. Yeah, 18% of the time. Well, what's going on? Do this. Well, I don't know what's going on. Let me go back to 13. Okay, so I don't know what happened, folks. I don't know whether the chart was late to update or what. So November tends to be a pretty good year. 69% of the time they're up 1.6%. And December looks much better now. I don't know what was going on with the chart there for a second. So you got about a coin flip for a 1% increase in December. And well, it doesn't matter. So you have a little bit working against you, but I like the way this is set up.
Yeah, nice work on the charts.
When we get to Monday, we're going to see the same thing.
Okay. All right. So moving along, I'm going to bang out Fortinet real quick and then move on to Nebius. So Fortinet cybersecurity, it really got sold off, I think, after an earnings announcement. Now, the market really reacted strongly, but since then, the stock's been kind of recovering, and I kind of like this stock and bought into it because I like their forecast of revenue going forward. They're terrific on the profitability side, cash flows. I calculated a discount. So I started buying into this one and continue to buy and believe that this guy is going to reward me over time. Reminds me of Zscaler. Zscaler had a similar situation where the market sold it off when it was operating in kind of a little bit of a troubled time. And this was the big sell-off. I thought it was discounted around these periods of time, bought the stock, took the elevator up, sold it, and then I switched horses over to Fortinet, and I'm trying to get the same type of result, is make 50-60% on this stock as it comes back and reverts back to its intrinsic value, which is the value of those cash flows, the value of the profits. The market may not like that. Maybe they had an adjustment and they're not completely bought in on the adjustment to the business, but the stock is in a very desirable industry, making really good margins, making good profits, and the discount I calculate is 39%. So I'm going to keep buying Fortinet and watching it, and I like what I'm seeing so far. I think it could head places. So I'm going to do a quick review of Fortinet, if you don't mind, and then we'll move on to Nebius. So Nebius is the next one. Nebius is a data center stock providing cloud infrastructure services for a high performance computing focused around AI. And boy, these stocks have flourished, right? Look at that chart. It had kind of been left alone for a while. And over the 1 year, 562%. Now I'm playing in the data center, but I'm kind of playing, with my training wheels on, so to speak, or I'm taking the safer investment. I'm invested in Amazon, which has AWS. I'm invested in Google Cloud. So I got plenty invested in the data center. I just have I'm insulated toward additional risk that exist. Nebius is flourishing because they're a pure play data center company, and it'll work until it stops working. And low interest rates are really going to help Nebius. That most definitely is going to help them. What could hurt them is if the whole AI build out slows down, stops, pauses, then we got problems because they have a lot of expensive equipment, semiconductors in that data center that aren't being used. Then it's going to get tough. But for now, enjoy the gains. I think Brucey, you're the one that's in this stock. Congratulations. I'm glad you're making lots of money. I hope it continues. We look at the forecast. Analysts are beginning to not keep up with the stock. One analyst is pessimistic on it. And forecasting this business has got to be really tough. Revenue growth, right? for next year, they're supposed to grow at 214%, 131, 144. Those are massive growth numbers. So looks really interesting. The profitability of the business. Gross margins, 53%. That is very good. They were operating at a negative gross margin, but 53% is good. And these businesses, keep in mind, I would encourage you to think about the moat, the barrier of entry, right? These guys do know how to operate a data center. They have access to buy semiconductors and then operate it. That's not a very high barrier of entry. You're seeing a lot of new data center companies. Of course, there's CoreWeave, there's these guys. You have old school companies that can operate data centers like the IBMs of the world. So the competition is going to be very, very broad and high. And of course, you got these massive businesses, Amazon, Microsoft, Google, that are in the data center business. So good luck with that. But for now, enjoy the profits. I hope it keeps going up for you. I hope you get super wealthy on the stock, but it's not my cup of tea. Any thoughts on Nebius before I move on to the next one?
I don't think I have any charts on that one, but I could look them up real quick. I don't know if we've looked at that one before. No. So NBIS.
Yeah.
Okay. Yeah. So trading slightly below looks like the 20-day is increasing with the price change today. The 50-day is increasing. RSI's in positive territory. PPO's in bullish territory. And based on these histogram bars, it looks like it won't cross over into bearish territory. So the chart doesn't look too bad at the moment.
All right. So NBIS, congratulations on the gains. Let's move on to Robinhood. And Robinhood is up 2.87. The whole story on lower interest rates and if the market flourishes in 2026, Robinhood stands to just continue to grow, continue to go up in value. So this has been my number one stock from a percentage appreciation perspective. And I'm just hanging on to my shares and not buying any more shares, even though the stock is up as much as it is. Actually calculate a discount on Robinhood. As crazy as that sounds, it's discounted by 40% because these guys just make so much cash. And I'm discounting them by 8%, by the way. But the cash they produce is just really high. And think about a new business they have and how it's going to produce even more cash. They put prediction markets on their website. Prediction markets being, hey, I want to, we had a football game last night. The Los Angeles Chargers played the Minnesota Vikings. Chargers won. If you wanted to bet on that game, I believe you can do it on Robinhood, and you can do it through the prediction markets option. And they took something like 4 billion contracts when they reported last, which was like a month ago. They're doing that through a partnership with Kalshi, which is fully licensed to do that. And Robinhood's just going to collect pretty much a nice like fee for it without doing the back end. And that is a terrific idea. I think Robinhood could acquire Kalshi. Maybe they could, maybe they want to, maybe they don't want to. We'll see. But this stock continues to just show me that, hey, I want to stay invested in Robinhood. It has terrific fundamentals, and I'm glad that I bought it. Any thoughts on Robinhood on your side on the charts?
Yeah, it'd be worth taking a look, so I'm going to have to make an adjustment to this 2-year price channel.
Wow, look at that.
This is the last time that we looked at it, so I connected the upper portion of the trend channel to this point and to this point, and we had a crossover here. But whoops, based on what I'm seeing today with the chart, I think I can get just as many points connected if I move this trend line up. So now I have 1, 2, 3. Whoop, I need to pull this down just a tad. So somewhere right around there. I want to make sure you guys agree with what I'm doing here. But I think this is somewhat reasonable. And then we need to take this dotted line and get it somewhat in the middle just so we can see the midpoint. So I think we can, with some confidence, reestablish our 2-year trend line there. So when you were first speaking, it looked to be overshooting its trend channel and probably could look for a pullback. But based on this, which just has just as many and maybe even one additional point touching, I have a lot of confidence here. It's actually trading within the trend channel just above the midpoint. So this looks really good to me.
Awesome.
RSI is positive. PPO is positive. It is losing a little bit of momentum here, but the histogram bars are already rolling over, so it may just stay in bearish territory. Look at this accumulation. That's just insane.
Wow.
Hey, I'm going to save this new chart. Good job.
Hopefully we break it again. So Shadow Guy, I'm gonna add Clove to this list and put that on there. All right, so moving along, and if I would really like to see the charts that you have on Dave, if I can give you kind of a heads up, because I'm picking up on a trend here. One of the things that I was seeing as a problem on Dave is it kind of had this period of time starting in May when the stock was showing some volatility, but kind of just trading sideways. Is this more recent rally going to stick? Because this is an exciting business. They're doing things in a different way, providing financial products to consumers. And with lower interest rates, it should help Dave quite a bit. And they're growing fast. They're small, growing fast. And if they continue to grow at these rates, they're going to be a pretty exciting company. They're creating cash flow. I think it's more of a fee-based business where they're providing these financial products in the form of loans and so forth, but they're selling off that debt to somebody else, or they have a pre-arranged agreement with some of these bigger companies like Blackstone that is really going to put the capital forward that's going to enable all these loans. So I think the business is interesting. They can capture the consumer and get them into their financial products. They're going to do really well. The trick to it is, when should we buy it, right? Because I do have a nice discount on Dave, but it just wasn't moving. So it was a little bit of, I don't want my capital to just sit around doing nothing. So I got in and got out on Dave. I'm currently not invested in Dave. It is discounted. If you look at the cash flow value, because these guys generate cash. When they sell a financial product, they collect a fee and they move on, and they can collect these fees quite quickly. So I'm seeing good fundamentals, but when is the right time to buy? I think looking at the charts on Dave would be really interesting. If I could pass it over to you, Daryl.
Okay. So while you were speaking, I put some breakout boxes. So and just to show you how powerful these can be, I'm just going to go to NVIDIA. If you can catch these breakouts after they've been consolidating, breakout, consolidation, breakout, consolidation, breakout, if you can catch those, they're very powerful. So these are when I started investing in NVIDIA. So now we're back to Dave. So just keep an eye on these consolidation points. So we had a breakout and ran up. We consolidated. We had another breakout. I probably should move that box over just a little bit. About right there. Okay. And then we had another breakout. So it's consolidating again. So just watch for hitting this upper bound on this box, and if it does that, it's probably worth another
What's the
run.
price on that on that upper limit there?
Yeah, 286. So what
286?
Yep.
Okay.
So what I will do is I will come down here and I'll set an alert on Dave at 286. When it crosses above that, I'll get a text message and then I can notify you. Dave, consolidation breakout.
Yeah, let's keep an eye on it.
Okay,
And they're
and I
gonna
want a price. Okay.
Dave's gonna announce on November 4th. So the other thing we'll keep an eye on is when they announce, if they have really good announcement, that may take us to that 286 magic number.
Yep. Yep.
So good stuff. Good stuff. Excellent work there, Daryl.
By
All
the
right.
way, the accumulation at that is on that one is at a 52-week high.
All right. That sounds really good. All right. Let's take on another stock that is a growth stock, Monday.com. And these guys provide software, and they provide software that, let's take a look at their website just to make sure I get this right. So they do CRM marketing. Okay. So it's like a development platform. So work management, CRM, service. Okay. So they're supporting the marketing, sales, product development, research and development, HR, IT, operations of a business. They have a small business a small business solution. Okay. All right. So okay. So I'm trying to understand them. It looks like they're doing workflow, which is automating tasks and connecting different processes. And with the AI paradigm we're in, this will be a very good opportunity for businesses to get more efficient. So, not a bad idea. Let's take a look at their fundamentals. This is a $10.29 billion market cap company. Over the last year, this stock has really sold off. Down 14.8 year to date. For the 1 year, it's down 29%. 5 year, it's been kind of a journey of sorts for investors. We had a period of time when it really flew up, and then it's really come down. Where's it going to go next? Now, the chart doesn't look all that fantastic. It really had a letdown back here. They're going to announce on November 10th. So that means that their last announcement was around August 10th. So that was, yeah, that's when August 10th they announced. Bam, the stock price really came down. They are growing. They're 1.1 billion in revenue. That's very good revenue size. To have a growth rate of 30% looks good. The last quarter, their percentage growth came down a bit, but I don't think that's a big problem because they're just getting a bigger number to compare against. So 26% is still fairly good. They're good and profitable. They have a very high gross margin number of 89%. And free cash flow is very good for this business. So I like Monday as a business. I think it's has a lot of potential. If they can continue to grow at this rate, I think it'd be fantastic. I decided I've got plenty of software investments, and I decided to put my capital into Intuit recently, and that's where I'm putting a lot of money because I have a lot of conviction behind Intuit. This one here is discounted. I think the discount I have on them is 28%, not the biggest discount in the world. And one thing I would note is what Monday is doing, Salesforce can do it, and so can others. So they may see a lot of competition in days ahead because the whole workflow and agentic AI opportunity, Salesforce, ServiceNow, Workday, they can all do that. It's part of their overall technology stack. So that might be a problem for them, which is why I put a higher discount rate because I think they're going to have risk ahead. Not very easy market to dominate because you have some big players that could really hold you back as a small business. Any chart comments on Monday that you have, Daryl?
Yep. So I own a very small position in this one, but I've got a buy order open right now. We added this trend line probably a month or so ago. It has broken out above that trend line. And just a few minutes ago, I added another trend line to connect this point and the top of this bar right here. This bottom trend line is connected to that same point here, but connected this low. So we have a couple different points we can look at. But I like the last 5 days and the 5-day moving averages moving up quite a bit. We broke out above this trend line. The RSI is positive. We had a bullish crossover in bearish territory, but the velocity on this shorter term moving average has a pretty significant rate of change. I think we're going to be bullish there pretty soon. The accumulation or distribution, I guess, from this August sell-off bottomed out right around August. We had an increase and then another round of distribution, but we did not reach the same level that we reached in August. So I feel I've got a lot of things pushing me in the right direction on this one.
All right.
So once I do decide to buy, I switch over to my daily charts, intraday charts. And we can see that this is a 15-minute chart. So I have a 5-bar chart and a 13-bar chart. So that's a 5 15-minute periods or a 13 15-minute periods is this aqua colored line. And I can see that the price ran up significantly above that 5-period line, but it is dropping back. I actually have my buy order in. Let me see where I set that. At 197.45. So that's where I put my order in. That's about where this 13-period SMA is set. I'm hoping that it'll pull back to there. I can see the RSI intraday is pulling back. The PPO is starting to roll over a bit. So I'm hoping it'll come down to my price if we get closer to the end of the day and it still looks like a good setup, then I may raise it a little bit, but I'm not going to pay what they were paying here for it.
Mm-hmm. Perfect. Well, let's see how that works out. Thanks for covering it. All right. So Packaging Corporation of America, these guys, as the name would tell you, they do container board and uncoated free sheet paper. So I guess they do the packaging part of products. Now, these guys are probably being hit with the whole tariff story. And that's probably going to hold them back a little bit because I'm sure they're doing a lot of their packaging for maybe businesses that are here in the US, but they manufacture in China. So their packaging has to be where the product is being produced. This is an $18.77 billion market cap with revenues of 8.64, PE of 20.96, forward P of 19.54. Analysts think it's a little discounted. Over the 5-year, this thing was tracking nicely. These were the years when we were seeing good consumption. Boy, they had a really nice run from 23 to 24. And then they came back down to earth. The revenues have been growing 9% in the trailing 12 months. Free cash flow looks good. It'd be nice to see them grow it a little better, but it's okay. Gross margins are really low. They do packaging, and operating margins are decent. Profit margins decent. Free cash flow yield's okay. So this one here, I don't know that it's going to do all that great going forward. It'd be a pass on me. It's just not the type of business I want to invest in. And their growth is going to be mid-single digit, but those margins just are the margins that I just don't like. It's a undesirable business based on margins. They pay a dividend of 2.38, but I'd rather just stick to some of these other staple stocks that I have that deliver a dividend, have a nice appreciation to them. But what do you think of PKG? Do you have any thoughts on this stock?
They are in a downtrend at the moment, but it looks like they're getting ready to break out above that downtrend. They are currently trading just below an upward sloping 50-day. The 20-day is declining, but that's going to be bottoming out if they can keep the price action above that 20-day line. The 200-day is still declining. RSI is at 49. PPO is in negative territory. Looks like we could have a bullish crossover here in the next day or so. Accumulation is not quite at a 52-week high. That occurred in September, but we're very, very close to that. The money flow just switched over into bullish territory. That's it for me.
Okay. Thanks for taking a look at that. Thank you, sir. All right. So we're going to end on Oddity, which is stock number 17. And before we started, I was mentioning to Daryl, I think it's going to be kind of a short stream, depending on how many requests we get. Well, guess what? We got a lot of requests because we only had a couple of stocks based on earnings that we were going to cover. And it looks like I think Peter wanted to take a peek at Oddity. Oddity is a unique company. I think what they're doing is they're using technology, and they would say AI because everybody uses AI, right? And they help, I would think, mainly ladies with the cosmetic suggestions based on their skin tone and all the other features. And they do that online. so you can upload your images, and then they help you with that. That's in essence what they do. It's a small cap at 2.7 billion, revenues of 751 million, PEs in the mid 20s. Analysts think it's discounted. Now the stock has not been having a good, call it 4 or 5 months. It's down quite a bit. For the year to date, it's up 12.76. The 1 month, it's done 22%. The 5-year had a real big bump here in 2025, but then it just kind of collapsed. So anybody who bought up here is probably not having a fun ride on the down. They are growing 26%, revenue 751, and free cash flow is decent. Gross margins are there. Now these guys are trying to, create a new space for themselves, and I think it's neat. I think it's neat what they're doing. I'm not an expert in that. I don't really know cosmetics, so I'll leave it up to somebody else to kind of comment if they think that's going to work or not. These guys are profitable. They have good gross margins, but they are tiny. That's going to be part of the battle is, will they get noticed by the market? 58% and $90 price target is the best price target out there by analysts, 52 being the lowest. So everybody thinks it's worth more. I can't argue with that. The fundamentals look good. It's good growth rate. They're going to continue to grow, good profitability. Just again, will the market notice these guys, and will the market buy into Oddity? That is the magic question that I can't answer. I could just tell you that I look at the business, and I think the business is certainly worth more than the current stock price. But when will investors buy it? I don't know. Any comments on Oddity? What are the charts telling you?
Well, it looks like it IPO'd in 2023, and it's back down to a support resistance line that has been tested many times, even in 2023, 2024, 2024, 2025, 2025, and we're back down to it here. So May, they really shot up, but I see some warning signs here. And this goes back to my same discussion that I had earlier. You had this peak and then a sell-off and then another run higher, but notice the RSI did not reach the same level of enthusiasm as it did on this high. So even though it reached a high here, that would be a warning sign to me, just because the momentum was not the same level of enthusiasm as it was here. Does that make sense?
Yes.
Okay. So that gives you a bearish divergence. Prices were going higher. RSI was going lower. PPO was going lower as well. So there were some warning signs right about this area that this stock was probably going to feel some pressure. This is probably not a bad price to buy. This has been support and resistance many times in the past. I do see some lower prices, so there's still some risk there, but this looks like not a horrible time to buy. It is very oversold at the moment.
Okay.
We could draw some resistance lines here, and you might want to wait for a break above those, but might not be a bad price here.
Very good, sir. Nice work.
Before we close, I do have one more chart I would like to show.
Go for it.
And this is going to be a little nerdy, but you said something at the very beginning of the show that made me want to show this chart. This looks at the SPX the XLY relative to the XLP. Then I look at correlation of that relationship. Then we look at the XLY and the XLP on separate charts. So in 2021, when we started the bearish decline, whenever you see the relationship between XLY and XLP going down, that means a bunch of the time I have correlation here. So let's look at correlation above about 50. Whenever the XPX goes down, it's probably because the XLY in relation to the XLP is going down. There is a high correlation to that relationship. So the XLY went down all year. The XLP stayed pretty flat. You start getting signs, you can actually watch these charts and get signs early that you're going to run into this situation. So I don't think you should let anybody tell you don't know what's going to happen in the future, because the charts will tell you that. Here we had a situation where, excuse me, the correlation was pretty high, 90% for much of the year, but we did have some negative correlations, and that's because the XPX, the S&P 500, was going up. The relationship between the XLY and the XLP stayed pretty flat, and that's because both of these were going up at the same time. Okay. Then we get to this. This is at the beginning of this year. Here we had the relationship between the XLY and the XLP was going down. The correlation tells me that the XLY was going down, the XLP was going up. That's usually never a good sign for the S&P 500. If you see this relationship going down, you know that the S&P 500 is going down with it.
Mm-hmm.
And here's one for the remainder of the year since April. We all know what happened. S&P 500 on an upward slope. The relationship between XLY and XLP is positive. XLY has really outperformed, causing this line to go up as well in relation to the XLP, and the staples have pretty much stayed flat.
Mm-hmm.
What we're starting to see now, I'm starting to see some signs here, because this was the 13th of October. We can see the XLP starting to move up, but so is the XLY. So is the relationship between XLY and XLP and the S&P 500. So these correlations are pretty strong, and this is over 5 years. I actually had the best performance on my portfolio in this down year.
And that's because you're basically taking advantage of the direction of the market, not necessarily that it has to be going up.
Yep.
Good for you. All right.
It was almost $250,000 in this year.
Good job. I also outperformed the market that year, but it didn't take much. You just needed to lose less, and I did lose less in the market.
Yeah, it was a painful year for a lot of people.
I established positions in that year that made me a lot of money. I bought a lot of Meta. I bought a lot of Netflix. I bought a lot of Google. I bought a lot of everything. Robinhood. And if I look at the compounded gains there, it was some of the best decisions I made with stocks were in 2022.
Yeah.
So the other thing I would also want to point out is when everything is bad, might be a great time to really do your homework and invest. When everything is bad, it's a huge opportunity, which is a little bit kind of opposite thinking, contrarian thinking, but it really is true that, these down prices, and more recently in 2025, where we saw that strong sell off that started in March, ended on April 8th. That bad situation was a huge opportunity.
Yeah.
So it played out that way. So let's remind ourselves of that when it's happening, because we did as a community remind each other in March, April, this is an opportunity. This is an opportunity. This is an opportunity. And we took advantage of it. So great work today, Daryl. Let's go ahead and land the plane. That was a fast 2 hours. Great work on the charts. Thanks, everybody, for the many questions you had today. And I appreciate everybody attending. And we got deep into stocks. Looks like the market is really liking semiconductor today. And it's liking Google. It's liking Palantir, Amazon, JP Morgan. The big banks are making money today. Capital markets making money. And Eli Lilly is catching a bid. Look at them. They're going to be announcing next week. So good luck to you today. Hopefully you catch some of this green comes your way and your portfolio goes up a nice proportion today. You can go into the weekend, enjoy the weekend, go out to somewhere nice to eat, knowing, hey, man, I made a lot of money on Friday. But I hope that's the case for you.
So
all right, everybody.
I want to let Mike know that Monday is coming down closer to my buy price. So keep an eye on that today, Mike.
All right. Message delivered. All right, Daryl, have a terrific weekend. Thanks again for everything you did today. And we will move on. Everybody, have a great weekend. Thanks for tuning in. Really appreciate you. Next week, just so you know, we're going to stream in the morning, and we're also going to do watch parties for the big earnings, probably on Wednesday and Thursday. So look for that notification on the channel. Thanks, everybody. Have a nice weekend.